Chinese EVs are making waves in the European market, offering competitive prices and cutting-edge technology. European automakers are feeling the pressure, but what happens if the EU imposes tariffs on these imported vehicles? Will Chinese EVs continue their push, or will these tariffs change the game entirely? Join us today as we explore how Chinese electric vehicles are reshaping the European market, the potential impact of new EU tariffs, and whether European manufacturers can hold their ground. Lately, for European carmakers, China still accounts for a significant portion of their revenue. It's a tricky balancing act. On one hand, they're feeling the pressure from Chinese electric vehicles flooding into Europe, undercutting their prices and offering more affordable models. On the other hand, they don't want to lose the foothold they've established in China, which, until recently, was one of the most lucrative markets for them. The whole scenario brings into question the effectiveness of the tariffs. Are they really going to change anything? Or are they more of a symbolic gesture aimed at showing that Europe won't just stand by as China dominates the industry? A lot of analysts believe it's the latter. When you look at the numbers, it's hard to imagine that a 36.3% tariff will deter Chinese automakers much, especially when you consider the initial cost advantage they have. Even with tariffs, many Chinese EVs will still come in cheaper than their European competitors. This doesn't just affect car makers. It's about the future of Europe's entire automotive supply chain. When we talk about Chinese EVs, we have to recognize that China has a near monopoly on battery production, which is the most important part of an electric vehicle. China controls the vast majority of raw materials, processing facilities, and battery production plants. European car makers are relying on Chinese batteries because there simply aren't enough alternatives, and this reliance makes it even harder to push back against the influx of Chinese vehicles. If the tariffs are too high and European manufacturers can't afford to bring in batteries, it could actually stall production, setting back Europe's own EV ambitions. And let's not forget that Europe has set some extremely ambitious climate targets. The European Green Deal aims to make Europe the first climate-neutral continent by 2050, with interim goals to cut emissions by 55% by 2030. Transportation plays a massive role in achieving these targets, and electric vehicles are seen as the way forward. By imposing these tariffs, the EU risks making EVs more expensive and potentially delaying adoption, which could put its climate goals out of reach. You have to consider the broader context too. For years, European automakers were riding high, producing high-quality luxury vehicles that the world couldn't get enough of. They weren't particularly focused on making affordable entry-level electric cars, especially not as much as they should have been. This opened the door for Chinese automakers to step in and dominate that segment of the market. They had state support, lower production costs, and an extensive supply chain, giving them everything they needed to undercut everyone else. Chinese companies like BYD and NIO have become household names in Europe for a reason. They aren't just making cheap cars. They're making cheap, reliable, and increasingly sophisticated electric vehicles. The success of these companies isn't just because of subsidies. Yes, government support played a significant role, but so did their business acumen. China made sure to secure lithium, cobalt, and other essential minerals years ago, and that foresight is paying off now. The supply chain they've established is not just cost-effective, it's also integrated and streamlined in a way that Europe has struggled to replicate. The tariffs, of course, are intended to create a level playing field. The EU wants to slow down the flow of these vehicles into Europe to give its own manufacturers time to catch up. But time might be exactly what they don't have. Consumers are already looking for affordable electric cars. With energy prices fluctuating and the cost of living going up, people are more interested in value for money than ever before. The idea that European car makers could continue making fewer, more expensive vehicles while keeping the Chinese out simply doesn't line up with market realities. Even the automakers themselves are split on the issue. Companies like Volkswagen and BMW are facing a dilemma: push for tariffs that might protect their European market share, but risk retaliatory measures from China, or oppose tariffs and keep access to the lucrative Chinese market. Germany, home to some of the biggest car manufacturers in the world, has been notably cautious about these tariffs. It abstained from the vote on imposing them, which says a lot about the economic ties it has with China. This is not an easy decision, and it's not just about cars. It's about the jobs and industries tied to automotive manufacturing and the future of economic relations between Europe and China. And let's not underestimate the risk of retaliation. China has never shied away from retaliatory measures when it feels that its interests are under attack. If the EU goes ahead with these tariffs, there's a real possibility that China could respond by imposing restrictions on European goods or making it harder for European companies to do business there. This could be especially damaging for German automakers, which have invested heavily in the Chinese market and have significant production facilities there. The economic consequences could ripple across the entire EU, affecting industries far beyond just automotive manufacturing. Another point to consider is the message this sends about free trade. For years, the EU has positioned itself as a champion of free trade and globalization. The bloc has been at the forefront of trade agreements and has pushed for open markets. Imposing these tariffs goes against that narrative and could set a precedent that might encourage other regions to follow suit. We could be looking at the beginning of a more protectionist era in global trade, which could have far-reaching consequences for the global economy. And ironically, it could end up hurting European consumers the most, as they face higher prices and fewer choices. Take a step back, and you start to see the parallels with what happened with solar panels. The EU and other countries tried to impose tariffs on Chinese solar panels because they felt Chinese manufacturers had an unfair advantage due to government subsidies. But those tariffs ended up making solar panels more expensive and slowed the adoption of solar energy. The situation with EVs feels eerily similar. If the EU wants to hit its climate targets, it needs as many electric vehicles on the road as possible, and the cheapest way to do that right now is with Chinese cars. By imposing tariffs, the EU risks making electric vehicles more expensive, which could slow the transition to clean energy. But then again, this is not just about numbers and economics, it's about strategy and influence. Europe's automotive industry isn't just an economic powerhouse, it's a symbol of European industrial strength. For decades, companies like Mercedes, BMW, Volkswagen, and Renault have represented the best of what Europe can produce. If the Chinese are allowed to dominate the European EV market, it's not just about losing market share, it's about losing a part of the European identity. The irony is that European car makers have been making record profits lately, but not by selling more cars. They learned that they could make more money by selling fewer cars at higher prices, a strategy that worked well as long as there was no one to undercut them. Now, with Chinese automakers offering cheaper alternatives, that strategy is under threat. And it's not just the entry-level market. Even in the premium segments, Chinese automakers are starting to make inroads, with models that offer a lot of the same features and quality at a fraction of the price. One thing that might make a difference is how these tariffs are structured. The proposed tariffs aren't a flat rate. They vary depending on how much support a company receives from the Chinese government and how transparent they are about it. This approach might be a smart move by the EU, as it aims to reward companies that are more open and cooperative. For example, Tesla, which also produces cars in China, will face lower tariffs compared to its Chinese competitors because it's more transparent about its subsidies. This nuanced approach might help avoid some of the pitfalls of previous blanket tariffs, but it's still a risky strategy. There's also the question of whether these tariffs will push Chinese automakers to build more factories in Europe. That's what happened with other industries in the past. When faced with tariffs or trade barriers, companies found ways to produce locally. If Chinese automakers start setting up production in Europe, it could lead to job creation and might help mitigate some of the negative impacts on the European automotive industry. But that's a big if, and even if it happens, it will take time that Europe might not have if it wants to meet its climate targets. It's also worth noting that tariffs are just one part of a larger strategy. The EU is also trying to invest more in its own battery production, secure supplies of critical raw materials, and encourage innovation within its automotive industry. Thanks for joining us as we explored the future of Chinese EVs in Europe. If you enjoyed this video, don't forget to like, subscribe, and share your thoughts in the comments below.